Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing regarding Nifty, Bank Nifty, the key levels to watch out for in both the indices, as well as the sectors in focus in trade today, as well as the next few trading sessions. First up, let's just briefly have a look at what happened in the global markets in trade yesterday. So yesterday, the US inflation numbers came out, which triggered a strong rally on Wall Street. So the hopes of a rate cut lifted investor sentiment. We had the Nasdaq which soared by 2.4%. The S&P 500 was up 1.7%, and the Dow gained 1% in trade yesterday. Most noteworthy, the S&P 500 has surged above its 20 and 50-day EMA levels, which is a bullish sign. Going ahead, it is likely to continue its upward journey and test the levels of 5,500, followed by 5,570 in the short term. If we see, Brent oil ended lower by 1.25% on Tuesday. However, it is still trading above its 20-day EMA levels. Going ahead, any sustainable move above the levels of 82 will lead to a sharp upside rally towards the mark of 84 in the short term. Coming to the update regarding the US dollar index. So the dollar index resumed its southward journey on Tuesday as it slipped by 0.51% and ended at 102.62 level. Going ahead, it is likely to continue its downward journey and test the levels of 102 in the short term, which is a positive sign for emerging markets like India. Now coming to the update regarding our markets. The benchmark index Nifty has given a breakdown on the bearish flag pattern. So if you see the pattern that it is forming, it is on the bearish side. It ended the day below the levels of 24,150 with a loss of 0.85%. The formation of a bearish candle on the daily chart implies consolidation with a sideways to negative bias. Going ahead, the 50-day EMA, that is the levels of 24,000, will act as the immediate support for the index. Any sustainable move below the levels of 24,000 would lead to further selling pressure in the index towards the mark of 23,850. While on the upside, the resistance zone has shifted lower in the zone of 24,300. Which is the immediate resistance, as it is the lower trend line of the bearish flag pattern is placed in that particular zone. Coming to the derivative data, so we had the August futures which dipped by 0.8% yesterday, and if you see, the open interest surged by nearly 4%. So this indicates a bit of short build-up which was seen in the markets yesterday. If we see the option chain data, that is for today's expiry, do note that tomorrow is a holiday for the market. So today we would be having the weekly expiry for both Nifty and Bank Nifty in trade. So at the current juncture, 24,200 and 24,300 strike have significant open interest, and on the put side it is mainly seen in 24,100. If we see the option chain data, the PCR is at 0.53 and the max pain is at 24,200. So it indicates that currently in the system there is more call writing in comparison to put writing. Coming to the update regarding Bank Nifty. So in trade yesterday, the benchmark index underperformed the frontline indices as it dipped by nearly 1.48%. Currently, it is on the verge of giving a breakdown of the bearish flag pattern on the daily scale. Most noteworthy, if we see, the daily RSI has again slipped below the 40 mark and it is in a falling mode. Going ahead, the zone of 49,650, 49,550 will act as the immediate support for the index as the lower trend line of the bearish flag pattern is placed in that zone. Any sustainable move below the levels of 49,550 will lead to further pressure in the index. In that case, the zone of 49,000, 48,900 will act as the next crucial support for the index. On the upside, the resistance has shifted lower in the zone of 50,200, 50,300 levels. Coming to the derivative data, so if we see, the index ended lower by 1.32% and the open interest has surged by nearly 21.38%, which indicates overall short built up in the index. Currently we have the PCR which is at 0.55. So once again in Bank Nifty also the call writing is higher comparison to the put writing. Coming to the volatility index, so the key market indicators going ahead for India VIX, if we see any sustainable move above the levels of 17.2 could signal a sharp rise in market volatility. Coming to the key sectors in focus, so we have Nifty Pharma and Nifty Healthcare. These are the defensive space and they are outperforming from quite a bit of time. We expect the momentum to continue in this particular space. On the flip side, we have Nifty Metal, Nifty PSU Bank, Nifty Realty. They are likely to underperform in the short term. Further, Nifty Bank, Nifty Private Bank, Nifty Financial Services also verge of giving a consolidation breakdown on the daily chart. Hence, we recommend avoiding these sectors for the next couple of trading sessions. Coming to the FII/DI data, so the FII is sold to the tune of 2,107 crores in the cash market, while DI is purchased to the tune of 1,239 crores. That's it for today's edition of the podcast. Thank you so much for tuning and regularly listening to our podcast. Have a happy trading session. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.